Folks, this is Bob Desmond over at The Contrarian Trader, and welcome to Best Stock Charts. Today we're going to do member stock chart requests. This is where we review the symbols that our members submit for me to review, and many of these stocks are stocks that we may be trading. But before we get into the trades that we closed out this week and made some nice profits on, let's first talk about the events that unfolded today. We had the Federal Reserve announcement, and as I've been telling members for weeks now, there will be no September rate hike, and sure enough, there was none. Last night, when I was doing market wrap and going over the charts of the major averages with members, I expressed that I was quite concerned. I believed that there would be no September rate hike, but I did not believe that it was enough to prevent the markets from going down, because they would automatically be concerned about December. And the economic data that has been so dismal of late requires that the Federal Reserve keep the heroin injected into the veins of the markets. And unfortunately, that's the analogy I need to draw, because that's exactly what it is. That's exactly what's holding this market up right now, is the heroin injected by the Federal Reserve. You take that heroin away and you are going to see a hissy fit like you've never seen before. The only problem is that today the Federal Reserve did deliver on what I expected. They hinted at not necessarily a rate cut, but accommodation that would keep the market at rest. Meaning, don't expect a rate hike anytime soon. They lowered their dot plots, which is basically an expectation of where each Fed governor stands with regard to wanting to raise rates. They also reduced forward-looking GDP to 1.8%. CPI, which came out hotter than expected, that's a consumer price index, a measure of inflation. It came out hotter than expected last week. They ignored it. They're using their own data, and according to their data, inflation is well under 2%. Nothing to be concerned about. So in their minds, their academic minds, their never had a job in their life minds, they will keep rates low. The problem is this, is that while we're happy today that the markets are going to move higher, my gold mining plays, silver plays, they all did very well. They just ignited the next leg higher for this market. And we are in an earnings recession with macroeconomic data that is falling off of a cliff. So what are we going to do? We're going to pump more heroin into the system, making the economy all the more addicted to the cheap money. And when we fall, and we will fall, it's only a matter of time. It's going to be all that much worse. So we'll keep an eye on the short side. But frankly, folks, if we get a continuation breakout tomorrow, it's off to the races for this market. It's going to move up higher. Now, could today have been a knee-jerk reaction by the markets? Might they read into the statement and the news conference that there may be a rate hike on the table for December? Maybe. And if they do that, you'll probably see the markets weaken, the dollar strengthen, and commodities roll over. I don't think that's going to happen, though. But I'll tell you, there's going to come a time when it's time to short this market, and man, we will be a part of it, because it is going to be the mother of all shorts. You thought that 2007 was a great time to get short the market? You ain't seen nothing yet. Stick around, folks. It's going to be a great time, because we're making a lot of money on the way up in this market. Wait till it starts heading down. It's going to be a barn burner, I can assure you. Now, let's talk about the trades that we closed out this week. LABU. We got long of the LABU, which is the leveraged ETF for biotech, right here on the 13th of September. We had broken out above resistance, pulled back, retested the breakout point. That was my buy signal. We sold yesterday after we rallied up and into the third standard deviation Bollinger Band. We had a topping tail the day prior. We booked profits. Today I thought I was a genius early in the morning because we pulled back. And by the afternoon we had rallied back, flashed a bullish key reversal. So what do I think is going to happen with the LABU? I think it's going to move higher. This is a very, very nice day today. I had hoped for a pullback to $45 per share. Wasn't to be. I think it's probably going to move higher. I want to get back in on LABU. I'm going to need a pullback first. I may not get it anytime soon. So for those members who remained long, good for you. I would stay long right now. But I will be looking for that pullback, and I'll be getting back on board with LABU. So in closing, we made a nice $11 per share swing trade profit on this position. So great trade, members. Congratulations for those who joined in. The next trade that we closed out was an extreme overbought trade. I went over this on Best Stock Charts several weeks ago. It's posted on my blog. It's posted on StockTwits. You can check it out free of charge. I did some analysis on it. I predicted that it would fall, and we opened up a position about here, and we got very aggressive. And let's go to the weekly chart, because what I was looking at, and I always teach members this, is that you want to open up your positions at resistance levels. And we managed to break through this resistance level here, and we had already started building a short position, but we built in increments, which is what I always teach members. And we kept enough dry gunpowder on the side so that we could get even more aggressive and doubled our position once we hit 10.90. We hit that resistance level. The next day, back to the daily chart, club like a baby seal. We booked profits near the close yesterday. A really nice trade. Congrats to those members who got involved and made a nice profit. Do I still think that there's some downside here? Yeah, probably. You may see, and I even spoke about this last night, the reason why I wanted to close out the trade, because this day here, meaning the 20th, was a greater than 12% downward move. The probability of seeing follow through on that downward move was unlikely. We would probably see a bounce, which we got. We had a hollow candlestick, which is a sign of indecision. These black candlesticks are a sign of indecision. More than likely, we'll trade sideways with a bias to the upside, then roll down and retest maybe $8.80. But for right now, it's no longer at extreme overbought levels, so TLYS is off of our watch list, but really a very, very nice trade. And again, congratulations to those members who profited as well. All right, let's talk about our member stock chart requests. Let's talk volatility. The VIX first. Hammered today. This is a monthly chart. And the reason why I'm using a monthly chart is to illustrate, because the VIX is very volatile, obviously. When you use a daily chart, it's a very noisy chart. And even a monthly chart is a noisy chart. Lots of fluctuations here, but the monthly chart helps smooth out the noise. And you can see that we're still putting in lower highs and lower lows. Now, if we close out the month below this dotted line here, right now we're trading just above it, you're probably going to see another push down on the VIX. If we see VIX drop down below 11, and there is precedence for that, the last time it occurred was back here in 2007. This is when we began shorting the market in advance of the big sell-off. So I'm expecting that if we get a breakout on the major averages, that the VIX will drop. And if it drops down below 11, I think that we're going to see a 9 handle on it. That'll set the stage for a big sell-off in the markets. So VIX, I'm bearish on. I think it heads lower. TVIX, which is a leveraged ETF, which puts you 2 times long of volatility. I was long of the TVIX up until a few days ago. I sold strength here. I took a small loss because I just don't like the way this vehicle trades with the VIX. It's supposed to trade with the VIX, twice the move of the VIX in the direction that the VIX trades. Rarely does it move in the same direction of the VIX. Why? It's a derivative. Do I know the mechanics of it? No. I'm not going to pretend I do. All that I know is that it's a flawed ETF. I would not trade it, and I will never trade the TVIX again. I traded it back here in the beginning of 2016. We did well. It's a timing vehicle. And if I see a situation, I was very adamant a little while ago, if I see a situation where the markets are just at such extreme levels that it just makes sense to get 2 times long of the VIX because the probability of the markets trading at where they're trading at that point in time or higher is extremely unlikely, then I would consider opening up a position on the TVIX. Or I just may buy VIX options. At least they're more correlated with the volatility index. This thing is just an absolute nightmare when it comes down to expecting correlation with the VIX. Again, it's a derivative, it's a trading vehicle. I get it, but it can be extremely frustrating trying to explain it to members when it doesn't trade in accordance with the VIX. So I don't like the vehicle, so I would avoid right now. The chart this week is very weak. Volume well above average. We're going to go lower. The tips, Treasury inflation protected bonds. We broke down last week. This is a weekly chart. Broke down last week. This week, a bullish key reversal. Now, there's a couple of more trading days left in the week. We can't close the books on this week just yet. We want to keep an open mind. Today's reaction may have been an extended knee-jerk reaction. I don't want to say the all clear is to the upside, but I'll tell you, judging from Yellen's statement today, she's like a deer in the headlights. I don't think they know what they're doing, and I don't think that they know how to stop this roller coaster. So the tips are probably going to head higher because we all know in Realityville, where we, the middle-class citizen of the United States, in Realityville, there's inflation. In Academicville at the Federal Reserve, well, there's no inflation because they don't want to look at food and energy. That doesn't count. They don't want to look at certain segments of the economy because they don't want to count that. So while the Federal Reserve is saying there's no inflation, you could see that the tips market, they're saying quite the contrary. There is inflation. Speculators are moving into the tips. This is if we close out this week above this upper band of resistance, this is a buy all day long. And I will probably be a buyer myself, just tuck a few shares away for the long term. This won't be a swing trade. This is going to be a trade that you're going to want to have on when inflation rears its ugly head. And while I believe it's already here, we haven't seen hyperinflation yet. And once that hits, brother, look out below for this market, and you had better be long of tips and commodities. The Russell 2000 weekly chart. Why am I using a weekly chart? The Russell 2000, unlike the S&P 500 and the Dow Jones, has not broken out to new highs. We put in an all-time high back in June of 2015. As it stands right now, we have a lower high. If we break down below 120 on the IWM, it's all over. You might as well short it because we're going to go a lot lower. If we break out above 125.44, I predict that we'll test 126.56 in a heartbeat. If we break out and close above 126.56, we're going a lot higher. So I will be looking to get long of the IWM. More than likely, the vehicle of choice will be the leveraged ETF. I like leveraged ETFs. The TNA, which puts you 3 times long of the Russell 2000. And what you're seeing here as well is an inverse head and shoulder setup. Here's your left shoulder. Here's your head. And here is your right shoulder. Here is your neckline. You see it clear, 82.35. Be rest assured, we're going up to 99, which marked the all-time high on TNA. Okay, the US dollar. This is for fellow member Jacob. Jake, what we need to do here is to go over the US dollar. For what reason? The reason is that we're going to be talking about a lot of commodity trades. We're exposed in our portfolio to a lot of commodities. They did very, very well. The key to making money in commodities, whether it be gold, silver, oil, nat gas, whatever, you need to watch the US dollar, because most commodities trade inversely of the US dollar. Now, are they all tick for tick inversely correlated? No. Gold, for the most part, is, except when you have a flight to safety due to geopolitical events. But otherwise, tick for tick, they trade inversely of each other. Believe me, I watch it, and they trade tick for tick. Sometimes my heart is pounding so much that when I see the dollar turn its head. Now, natural gas, not so much so. Why? It's because we produced a ton of it here. So, different commodities have different relationships with the U.S. dollar. Me, I favor the gold mining names. I favor silver, and I'll soon be looking to buy gold. So I'm very, very sensitive to the U.S. dollar. Now, the U.S. dollar weekly chart. Why am I using the weekly chart and it being only Wednesday? The reason is we're trading down below this critical support level. You may be asking, Bob, why is it so critical, that support level? Great question. It's because last week we broke out and through this resistance level. That's a breakout. That's significant. Now, this week I expected a pullback because we would want to retest the breakout point to see if what was resistance would now act as support. As it stands right now, we are trading down below this lower band of support. This could all change by Friday. We could close out the week trading higher on the week for all I know. But as it stands right now, very, very bearish chart for the US dollar. Now let's take a look at a daily chart, because what you're seeing set up here, and I've been discussing this with members for weeks, we have a head and shoulders setup. Left shoulder, head, right shoulder. We put in another lower high. Here is your 45-degree neckline. We break down below 24.40. It's all over, folks, for the U.S. dollar, and you are going to see commodities rip through the ceiling. So the U.S. dollar as it stands right now, I'm quite bearish on today's price action. We were down on the UUP, just shy of a half percentage point. Not bad on a percentage basis. It was down lower. It held the 20-period moving average here in dotted green line. Volume was not that bad. It was really quite low today, which should have some people concerned, like me, because I'm long of commodities. So this is a caution flag for me. We were down on the day, fine, but on light volume. There was no distribution of the U.S. dollar today. Now that we know that the U.S. dollar is looking weak, but certainly not dead man walking yet, let's take a look at our commodity plays. These are the stocks that were requested of me to review and that I'm looking to put on. Gold, the GLD. RSI breaking out. Let's say we closed at resistance. Let's not get cocky here. It looks like we may have inched above resistance, but let's say we closed at resistance. Let's be conservative. The 50-period moving average is declining. Did we close above it? 50-period at 127.20. We closed 7 cents above it. Volume, very nice. Higher low on Ultimate Oscillator, higher low on Stochk RSI. MACD poised to go positive probably tomorrow. The chart looks good. So we're going to be looking to get long of gold very soon. Nat Gas, UGAZ, the leveraged ETF of Nat Gas. This is a daily chart. Daily chart is really not telling you the story that is shaping up to be a very, very bullish run for Nat Gas. Let's go to the weekly chart. Now, the weekly chart, I spoke about this several weeks ago. Natural gas had rallied. I believe that this is a stock chart request by one of our members. And it rallied up and into the third standard deviation Bollinger Band. I said at that time, wait, because we rallied up and into the third standard deviation Bollinger Band. Allow it to pull back, retest support. It did. Now we've rallied back. We broke out last week. Now we're moving higher once again. I'm very bullish on natural gas. Higher low on stochastics. This is one where we will be looking to trade very soon. So members, stay tuned for an alert. Uranium, weekly chart. This is one of the first commodity trades I put on in 2015 going into 2016, and we did quite well. We booked profits up here, and the shares have pulled back to their breakout point and are retesting. Uranium is looking good. This is the URA. Let's update this chart. Okay, so here you have it. I think that these shares can be bought very soon. I would keep a stop loss right below 12.99, but I wouldn't go all in just yet. I would want to get very, very aggressive buying the URA on a breakout above this upper band of resistance. So members, we're going to be talking about uranium for a while, meaning we're going to be talking about it when we open up our trade, monitoring it, and looking to add to it on a breakout. And this is not a short-term swing trade. I don't like these Stokes. I think that we're going to see some backing and filling here. The Stokes are still, this is like a rounding top, a lower high and a rounding top. This needs to get resolved before I got aggressive buying URA. That won't prohibit me from buying it because we're so close to a stop point that the risk to reward is really in our favor. So members, stay tuned for more on URA and gold. The emerging markets. Okay, so the expectation from the Federal Reserve is that they do nothing. What's that going to do to the U.S. dollar? It's going to hurt it. It's going to drop down lower. So what do you want to own? Emerging markets. We've done very well with emerging markets so far this year. We booked half profits on our BRZU trade, and now we're looking to rebuild that position. But the EEM is looking good as well. Now, would I buy it tomorrow? No. I want to make sure that first we are rest assured that today was not a knee-jerk reaction by the markets, that overnight they don't read all too much into Janet Yellen's comments and they take the markets down. If they rally the U.S. dollar, that means that we've probably all got it wrong with her statement, and you'll see commodities pull back. So I'll be up after night looking at the Forex markets to see whether or not the euro is gaining ground, and that's really critical. It's the euro that matters. So getting back to the EEM, we need to see a weak U.S. dollar. We need to see volume continue to remain above average. Let's go to a weekly chart. Really pretty chart. Take note of your Stokes hooking up, RSI hooking up. This is a weekly chart. Again, I don't mean to keep reminding everybody about us reviewing a weekly chart on a Wednesday, and it could change. Unfortunately, that's the truth, and I want to keep everybody warned of that just because we look like we have a handsome candlestick so far this week, there's still 2 trading days left to go. We could pull back, and this beautiful candlestick so far this week could turn into a disaster. So I need to be conservative. That's what I get paid for. I don't want you hoping when you should fear and fearing when you should hope. That's my job, to be the, let's call it the designated driver. So EEM, I think, is looking very good. I would love to see it trade where we are right now or higher by Friday afternoon, market close. So EEM is definitely a watch ETF. EWJ, this is the iShares Japan ETF, puts you long of the Japanese stock market, and I'm rather surprised that it rallied as strong as it did today. It may pull back overnight because the Japanese economy relies upon exports, and with the dollar dropping, that means that the yen will strengthen, and that usually is not a good thing for the Japanese stock market. So right now, I would have to say, would I buy the EWJ? No. Let's see how it plays out in the currency market first, because it's the currency market that is the tail that wags the dog, which is the stock market. So keep an eye on the dollar-yen relationship. And we are also leaning into the third standard deviation Bollinger Band. We can continue higher as we did back here, but just be aware of the fact that we are leaning into it. RSI is looking good. These Stokes need to hook up. They are implying right now that they want to. We need to see more evidence that they will, though. Daily chart. I think the enthusiasm today was more a result of the Japanese Federal Reserve providing just the proper guidance for their QE program. This is a 2-hour chart, and what I'm looking for here is how it reacted after the Federal Reserve made their announcement here in the States. Now remember, the Japanese markets were closed, but the EWJ continued higher into the close. It closed off of its highs. It is a bit overbought, no doubt about it, on an intraday basis, but it did continue higher. It did not collapse. So EWJ is looking good. Again, though, let's pay attention to the dollar-yen relationship. If the dollar is weak, the yen's strong, the Japanese stock market's going to have a problem moving higher. All right, now we're going to talk about individual names that were requested of me to review. AGEN, really nice chart. The only problem here is, I'm going to be a nervous Nelly here, is that we were in a tightening ascending wedge formation. We busted out above the upper band of resistance. We're leaning into the third standard deviation Bollinger Band. Does that mean sell your shares? No. What it means is put a trailing stop loss order in, because we can move higher, but this is more of a sign of the shares being moved higher by probably shorts getting squeezed. These volume bars are above average, implying that you do have some institutional demand, so it's not all short covering. I wouldn't buy these shares just yet. I certainly wouldn't short them. Ideally, you get a pullback and a retest along this upper band of support. Now, weekly chart, this was really the time to have bought it back here on this breakout. You have a lot of resistance here as well. I can't condone buying these shares at these levels. The Stokes look good. The chart right now looks good, but I can see a setup here where you can get a quick pullback. So how I would play it, if you're dead set on getting long no matter what I say, let's draw some lines. Okay, so here we have it. We have our primary lower band of support, meaning the real serious support level that it must hold to keep this rally going. Here we have a secondary, more parabolic lower band of support. If you're an aggressive trader, if it pulls back and retests, I think 625 would be a good support level. Then you could buy it. If you're less aggressive, wait for a pullback and a retest of the support level. Now, where do you get worried? Right here at, let's call it $7.30. This is where you saw resistance back here in August of 15. Yeah, it acted as support prior to that, and resistance back in April of 15. So a lot of history back here. These buyers of shares who held through all of this damage, they want their money back, and they will sell. So just be aware before you get involved with this trade to the long side. You do have overhead supply. Next chart up, TWILO. I don't know what they do. I keep hearing the name of this company. I have to look it up. I do a little bit of research. So anyway, I really care about the charts. And I mentioned back here, the last time we discussed this was a member stock chart request back here. And it was in a pennant formation. We had topping action, a hollow candlestick, and then we broke support. But rather than seeing a ton of damage get done, it formed a nice base. And now we have a double bottom setup. Prior low 49.61, new low 52.77. We have closed above a key support level once again. We moved higher today by nearly 9%. Volume was okay. We don't have a ton of data here on this chart, so the volume looks good relative to prior days. Could be better, but it looks good. Higher lows on ultimate oscillator. I like the chart. So TWILO is looking good. I'm going to do a little bit of research on this company, and we may be long of it ourselves. Members, I'll send out an alert. 11 Biotherapeutics, EBIO. Daily chart. I'm going to offer that you shouldn't buy these shares just yet. Why is that? We've been putting in lower highs and lower lows. It's simple as that. Now, we flashed a bullish reversal on the 20th, but today we rallied but closed well off the highs of the day. So it's a day like this, volume was good. It's a day like this that has me looking into the intraday chart. Let's use a 30-minute chart. The first thing that jumps out at me is the RSI. Note how we pulled back severely on the share price, and we'll come to this in a second. But rather than break down below the 50 or neutral level on RSI, we formed a base. So the RSI did not confirm the continuation breakdown on the shares. That's a bullish event. Now, why did the shares sell off? Well, they gapped higher above the third standard deviation Bollinger Band. You expect that type of price action because a stock is not supposed to remain above for any length of time its third standard deviation Bollinger Band. Look at the last time it happened. It was back here on September the 1st. What happened? This nightmare. Does that mean that this type of a sell-off is going to occur again? No, not at all. I'm not implying that. I think that we're forming a nice base here. We filled the gap. If you see a rally up and through 356, I think that the shares then become interesting and you can look to buy them. I would not be an aggressive buyer until we clear the day's high of $4.04, which I believe is where it coincides with the 50-day moving average. Back to the daily chart. Yep. Exactly where the rising 50-day moving average is. So I like the fact that the 30-minute chart is looking good. I can't ignore that we have resistance above here. Before I got aggressive, I would need to see the shares clear $4.04. Apple. You know, it's funny. They come out with a new product. The shares soar, and all the talking heads go from bullish one day and everybody to the next because at a couple of days worth of pullback, they become bears on the stock. And all they need to do is look at the chart. This is a good chart. It got overbought. It leaned into its third standard deviation Bollinger Band where it's not supposed to be. It pulled back. Now we filled the gap. Bottoming tails put in, implying support. You see a breakout above this upper band of resistance. You buy the shares. Simple as that. You can't listen to these talking heads. Weekly chart. So we do have on a weekly basis overhead supply. And that's okay. And the reason why it's okay is because if we break out, back to that daily chart, and you keep your stop loss right below the day's lows, this support level here, keep your buys small. You take a small loss if the shares pull back. Now back to that weekly chart. When do you get more aggressive? When you clear this upper band of resistance. That puts into view the 130 level. So while Apple is not entirely out of the woods yet, I think the shares are setting up nicely on a daily chart. On a weekly chart, a little bit more of an issue due to the fact that you have overhead supply, but I think that'll work through it. So Apple is still looking good. TOPS, weekly chart. All right, so the Federal Reserve, they came out. The chicken littles balked again. The sky is falling. We can't raise rates, but the economy is recovering, right? So that's the same old line. They're afraid to raise rates, but the economy is recovering. So what must you do? Buy a transport, because the perception should be and is, and you may think a lot of traders are bright. They're not. They believe what the Federal Reserve has to say. So they'll buy the transports, betting that the global economy is going to rally. So TOPS, bullish reversal week thus far this week. It can be bought. Use a stop loss right below the week's lows. I would not be an aggressive buyer right now. I would add more on a breakout above this upper band of resistance. TOPS looking good. Take note of RSI pulling back, holding the 50 level. Good stuff. Stokes just may hook up. So TOPS looking good. And that's it for tonight, folks. Members, we will monitor this market tonight. I'll be keeping an eye on the US dollar. I will communicate my thoughts with you in the morning. We'll see how the futures open up. Hopefully the dollar is weak. That'll send our commodity trades higher, and it'll also set up a lot of new potential trades, some of which I already went over tonight. So if you're not currently a member, please sign up for our 14-day free trial offer, or at least enter your email address. We'll have these videos sent out to you along with a couple of free trading lessons. Everybody have a great evening, and I will talk to you soon. Be well.